Hello and welcome to Tax Matters. My name is Olumuyiwa Matuluko. Presenting with me today is Christina Pius.
Hello, viewers.
So, Zambia eventually won the African Cup of Nations against the permutations of the bookmakers. Talk about the underdog. Well, life goes on. To the Ivorians, better luck next time. Last episode on this program was devoted to the special meeting that was held by the Joint Task Board to deliberate on the Personal Income Tax Amendment Bill 2011, which you must agree with me is fast revolutionizing the administration of personal income tax in Nigeria.
I recall, and we all recall, that episode ended in the middle of the interview with the chairman of the Joint Tax Board and the executive chairman of the Federal Inland Revenue Service.
That was a pity. It was due to time constraints. And so today we are going to conclude that interview. We will also bring you more tax computations, tax tables, based on the Personal Income Tax Amendment Bill 2011.
They would love that. Everybody is now carrying calculator to know how much they will pay as tax.
Yes, and another fallout of that Personal Income Tax Amendment Act 2011 is the compulsory registration of all taxpayers, both individual and corporate taxpayers, for taxpayer identification number, another initiative of the Joint Tax Board. On Tuesday the 7th and Wednesday the 8th of February 2011, the Joint Tax Board held another meeting, this time for stakeholders, to put together the rules and regulations that will guide the operation of the taxpayer identification number system. It was the second in the series. They had held one in August 2011. In attendance were academics, legal practitioners in practice, industrial and professional associations like the Nigerian Labour Congress, the Trade Union Congress, ANAN, ICANN, Bar Association, Nigerian Union of Journalists, Nigerian Bar Association and the Nigerian Union of Teachers, ministries, departments and agencies, tax authorities, legal advisors to tax authorities, banks and other financial institutions.
Now, sorry, madam. I don't say for my name.
I don't check in no day. After all my wahala, these people still no register me.
How about I put on 14?
Tingini. Wetin concern tin tomato for inside this matter where we dey talk now?
Eva, explain for am 14.
Madam, taxpayers identification number TIN, a special number for all correct taxpayers. It is compulsory if you want to register and do business with government. Without TIN, you not go fit do business.
I beg. Now how much I go pay to collect this thing?
Madam, I get am 14 free.
Madam, take your certificate of incorporation to FIRS office, fill the form, and you go get am one time.
Just like that? I beg, make I go collect my own thing.
TIN na free o, na for everybody. Na your correct identity. FIRS, it pays to pay your tax.
Welcome back. You are still tuned to Tax Matters. The signing into law of the Personal Income Tax Amendment Act 2011 by President Goodluck Jonathan has become the focus of discussion in tax circles across the country. As we said earlier, the last episode of this program was voted to the special meeting that was held by the Joint Tax Board aimed at ensuring a smooth takeoff of the implementation of the Personal Income Tax Amendment Act 2011. As part of that story on the last episode, we brought you the first part of the interview that we held with the chairman of the Joint Tax Board, who is the executive chairman of the Federal Inland Revenue Service. In that first installment, the chairman praised Mr. President for signing the bill into law and the governors, the state governors, for supporting the Amendment Act. Let's hear more from the chairman, Joint Tax Board.
There are so many things also in the same act to cushion the effect and to ensure that the revenue authorities, including the Federal Inland Revenue Service, moves away from this unilateral focus on the few low-income earners to the wider tax net, which is what the revenue authority should do on a day-to-day basis. The wider tax net, which covers both the salary earners, not just that you have to tax the salary earners, but not just the salary earners. You go to the self-employed, which are the bulk, by the way, of the tax-paying public. You go to the informal sector, and you also go to those what you may call the high net worth individuals who we also have admitted are not paying the taxes that they should, and we haven't, as revenue authorities, summoned the political will to address that. So what this act does is to challenge the revenue authorities to do what they should have been doing all these years, to ensure that you do not source revenue from the disadvantaged, to ensure that you source revenue from a wide tax net, ensure that there's equity in the system, ensure that there's redistribution of wealth, ensure that those who get the most should contribute the most. That's the essence of the act. And with this, like some of the states have said, if you analyze the tax-paying public in a particular state, 10% are those that they're even addressing today. 90% are untouched. Even the mechanic, the vulcanizer, the person who is involved in self-employment trade, who is involved in what one may call not a low level of turnover business, should pay tax, no matter how small. Everyone must contribute, and that is what will make us connect, because that was also the issue when the reforms were being put in place. Because we are not contributing to the way government is run. Yes, we complain, but we don't see our money in it. What this does is to bring a connection between the governed and those who govern. So that way we can hold government accountable. Even if it is 100 naira, every single person should pay.
In the course of the interview, we pointed out to the chairman that artisans and petty traders in most cases pay on a daily basis to local government officials and in some cases to some roughnecks.
Again, this is a challenge to the states. You have some payments that are going on that are not legal. There's no enactment. There are no state codes. Nobody knows what is legal, what is not. The Constitution gives the power to the State House of Assembly to enact codes, laws that will clarify what the local governments should do. And that way you build harmony. Because now we have a Personal Income Tax Amendment Act, which provides for the first time that we can have presumptive regulations to tap into the informal sector, to tap into those groups of professionals where we are finding difficulties in assessing their income, to come up with presumptive tax regulations to be able to know what kind of tax to tax. This combined with the state tax code, which prescribes for the local government councils the charges, the rates, or the state revenue code rather, the charges, the rates, the levies that are legal, harmonized. So that way there's no particular person that is overburdened, will now truly bring to the public space the whole intent of the reforms, which is equity, redistribution of wealth, growth in revenue, a sustainable revenue source that will help build our dear country.
Finally, we were surprised to find a provision in the Amendment Act that the President, the Vice President, the governors and the deputy governors are now to pay tax on their official emoluments. What informed that?
Again, I think it's a signaling effect. If we want the President, the state governor, to encourage others to pay taxes, then what came out of the whole study group exercise was then the example should be set by the President, the Vice President, the Governor, the Deputy Governor. So they too file returns on a yearly basis and lead by example. So that is the essence, because as we want to grow tax revenue, the whole idea is to make it holistic and everyone on board.
We also spoke to some chairmen of state boards of internal revenue.
We've just come out of a meeting to discuss the Personal Income Tax Amendment Bill 2011. What would you think are the highlights of that amendment bill?
Well, the most significant of the highlights is the virtual reduction in tax relative to the individuals paying tax, and is going along with the economic realities of the Nigerian economy. Hitherto, the orthodox means of tax deduction, which was in compliance with the old rates, it has not been a very good relief for the taxpayers. But now that we have got a consolidated salary structure with a consolidated relief and allowances, it's going with the economic realities of Nigeria. Apparently, it's signifying that the taxpayers will now have a lot more money in their hands for economic activities, for their well-being, and which apparently will also assist towards revenue generation from other areas.
You think that taxpayers, especially those at the lower level, will be very happy with this law?
Yeah, I think they should, and they will be happy, because those who, by virtue of their earning power, are captured in will have to pay little or nothing. I think generally the law recognizes that reliefs should be granted to reduce the burden on taxpayers, particularly the low-income earners. It also recognizes that the higher income earners, there should be wage redistribution based on taxation. It also empowers the revenue authorities in a manner that would support their discharge of responsibilities. It is also law now that accountant generals are under obligation, based on instructions from the revenue authorities, to deduct as source and make such revenues available to the revenue authorities. That's a fact, apart from the fact that the reliefs are heavy. Now, the fact that the reliefs are higher now also means that the states would generate a lot less compared to what previously held. But it also presents an opportunity for the states to look really inwards to also explore alternative sources of revenue generation outside of payee. Even at that, I mean payee, not just of the organized sector, as what happens now, but the states will also explore possibilities of generating revenues from the informal sector as well.
For Mr. Hosseini Elama, chairman of the Edo State Board of Internal Revenue, the attendant loss of revenue that will arise from the implementation of the Personal Income Tax Amendment Act 2011 can only be mitigated if the federal government lets go of the value-added tax or allows the states to collect sales tax.
If the emphasis of the federal authorities is to reduce the tax burden on the average Nigeria, that's the direct tax, and then now see how to enhance the indirect tax, as it were, one of which is the value-added tax. And I said, in most jurisdictions where you have a federal system, sales tax is something that is administered by the state tax authority. And I would therefore say, haven't seen the potential revenue drops as a result of this amended Personal Income Tax Act on the state. The federal authorities should allow states to administer the value-added tax in their respective states, so that it will help to cushion this drastic drop in revenue.
Mr. Hosseini spoke further. We understand, even before it was signed into law, that there were some concerns about the perceived loss of revenue that will result from that passage. This Personal Income Tax Amendment, what are its implications for the revenue profile of Edo State?
Thank you very much. For us in Edo State, it's actually a welcome development that the Nigerian taxpayer, the mass of the Nigerian taxpayer, the new law provides a lot of relief and burden for them. But as a state, it also has a part on the internal generated revenue of the state substantially, because majority of those that actually comply to pay tax are actually the low-income people and those in the formal employment. So for us, it's a twin this thing. We welcome it because the mass of our people will get relief as to the tax they pay. But we also see that there are major challenges there that we need to further put more efforts towards enhancing or optimizing the IGR that is due to the state. Maybe this time we need to focus on some other areas and maybe on the upper segments of the society. But the challenge has been, how do you get every taxable into the tax net to enhance the tax base? So for us, we believe that as part of our reforms, we need to do all that is required for us to bring all those that ought to be covered by the tax law to come into the tax net and enhance the tax base. So we need to do what you call automation. And one of the areas I was emphasizing is, first of all, you must be able to identify who are these taxpayers. That's where the issue of the tax
identification number coming, the TIN. And we believe that the earlier we fast track to implement the TIN, the better for us. Because without the TIN, you cannot even come with other ICT solutions, like the ITAS, for example. That's the Integrated Tax Administration System. So we need to put all of this so as to expand the tax base and bring those that ordinarily should be paying tax to come in.
And so, the week immediately following that special meeting, the Joint Tax Board held another meeting, this time a workshop on rules and regulations that will guide the administration of the Taxpayer Identification Number System. Mr. Andy Egemowi represented the Executive Chairman of the FIRS at the opening of the two-day workshop.
The TIN system is an electronic system of identifying and registering taxpayers nationwide using 10 fingers biometrics. There is a need to have the TIN rules and regulations that should state what TIN should be used for. We have done a workshop the third quarter of the year, 2011, where we had legal advisors from all the authorities in attendance, and their inputs and comments have been exchanged to the document. The main goal of this workshop is to present the draft TIN rules and regulations to you and secure your buy-in, support, bring inputs, suggestions and comments on the TIN rules and regulations to ensure that all stakeholders are carried along as well.
Malam M.L. Abubakar is the Secretary of the Joint Tax Board.
Let me amplify further on the provision in the Personal Income Tax Act 2011, provide that all taxpayers, all categories of taxpayers be issued with TIN.
Other speakers took turns to set the tone for the two-day workshop.
Precisely August 15th last year, we were assembled here to deliberate on this document. The draft, it was UTIN, Unique Taxpayer Identification Number then. And we had inputs and comments from various internal, what could be referred to as internal stakeholders. Now we are exposing this to a larger forum. The name has changed. The unique has been dropped in compliance with the Federal Inland Revenue Federal Inland Revenue Service Establishment Act 2007, precisely Section 8(1)(q), which says that the service shall issue tax identification number to taxpayers in collaboration with state boards and local government. So, furtherance to that, the unique had to be dropped. Nothing else has changed apart from the fact that the unique has been dropped. It's still the same nomenclature, still the same form, and the substance remains. The tax identification number, rules and regulations is meant to guide the operations of the tax identification number solution and systems once it has come into operation.
The thing we are doing will give just one number to taxpayers in the country. And this number you are going to have that number for life. And even if you are no longer alive, but you still have income that will accrue to you, those payments, taxes can still be paid using that tax number. And what will make this number unique is the fact that it's going to, you as an individual have identified with 10 finger biometrics. So wherever you go, that number will still be a number. For instance, if I have a staff of NTA in Enugu State and I'm transferred to Plateau State, there will be no need for me to get another TIN number, because that TIN number can be used to pay taxes to more than one tax authority. That is why, if I am in Ogun State and I'm supposed to be paying my taxes to Ogun State Board of Internal Revenue. If there are federal taxes I should pay to FRS, with the thing that we're implementing, you should be able to use the thing to pay to Ogun State Board of Internal Revenue, and also pay to FRS if the need arise.
The importance cannot be overemphasized, because then you have information. And with the information you have, you can tell who has paid, who is evading tax. So it is going to reduce instances of tax evasion. Apart from that, we have complaints of multiple taxation, and with the information available, I think this would also be avoided.
This is a kind of empowerment for us as taxpayers, because this is an opportunity for us to contribute to what is before us, and permit me to say that the quality of our contribution is what is going to define the content and the ultimate form of these documents. And this is the new trend in fiscal legislative making. Gone are the days when things are done in secret. So I've heard about buying in, because eventually what we are putting together is not going to work in vacuum. It's going to work in an environment where some people are already working, where some people already have understanding even better than those who are putting it together, and they are in a position to make contribution. And let me say, with due sense of responsibility, that the argument for UT cannot be overemphasized. I know as a fact that in some countries, the life of citizens is centered around this type of document, or this type of device. I think in Malaysia, there is hardly any transaction you can make that your tax identification number will not be required. And they are also central to combating tax evasion. And we all know that personal income tax is a broad-based tax. In fact, without this type of cooperation by all the levels of government to develop a comprehensive database, the task of administering personal income tax is going to be futile. So I want to congratulate the JTB for spearheading this important task. And I want to plead, finally, that eventually when we have put this document together, enforcement should be very, very quick. Because the problem in this country has not been having a good law, having good regulation, but enforcement. We must recognize that no matter how good any regulation or any law may be, they are not capable of self-enforcement. So my prayer is that at the end of the day, when we come together again to review some of the things that need to be added or deleted, this document would have significantly been improved. Thank you very much.
And so for 2 days, those brilliant men and women put heads together to knock together a set of rules and regulations to guide the administration of taxpayer identification number system in Nigeria. The outcome will be passed on to the Federal Minister of Finance for due consideration, signing, and issuance. And with that new set of rules and regulations, Nigeria is set for a revolution in the administration of personal income tax in Nigeria. And that also sets the stage for us to move on for the next program, as it is time to go. But before we go, we want to share with you more tax computations of the tax liabilities of personal income taxpayers under the new Peter Amendment Act 2011. We want to thank you most sincerely for watching. I'm from Christina.
Bye for now.